So hi Emma, thank you for joining me today. Not that we're long into 2026, but it's been a fast-paced start. Looking at January to date, what would you say have been the main drivers impacting wholesale energy market behaviours?
Yeah, so I say we've probably had three main drivers so far this year. Number one, and probably the front runner by quite a long way, has been the weather, and then followed by LNG as our second driver and geopolitics coming in third.
Or weather is always going to be a main driver when it comes to the energy market, understandably so. It's always going to be here. On that basis, would you say temperature is always going to be a major factor when it comes to energy demand?
Yeah, certainly, and it just depends essentially what season we're in as to which way that goes. So in summer, obviously the warmer temperatures that we have can really boost cooling demand if we get some hot temperatures, and that can drive prices higher. And then on the flip side, in the winter, when we have really cold temperatures, as we have done in this January, it boosts that heating demand that we have and can push prices higher as well.
So thinking ahead to February and I guess the remainder of this first quarter of 2026, what do you foresee being the main indicators when it comes to weather?
So we actually have forecasts at the moment in February for something called a sudden stratospheric warming event. It essentially just means that we get really warm temperatures quite quickly in the stratosphere, which results in the opposite effect on surface. So it can result in significant cold temperatures and even events like Beast from the East that we saw back in 2018. So those easterly winds coming in and really stormy conditions.
So a lot of things that could impact pricing
Yeah.
moving forward. Focusing on storage, for example, firstly, how much do we currently have? And second to that, how does that compare to prior years?
Yeah, so in Northwest Europe at the moment, we're around 47% full in terms of gas storage. And in comparison to sort of previous years, we're about the lowest that we have been for this point in the year since 2022. So we have withdrawn at quite a rapid rate from storage facilities this year.
Okay, and I'm hearing also LNG could have an impact, and in this industry we do love an acronym or two. So on that note, just to elaborate, could you explain what LNG is?
Yeah, so LNG stands for liquefied natural gas. And it is essentially just natural gas that's chilled to the point that it becomes a liquid. And when it's a liquid, it takes up a much smaller capacity. So essentially, it's a lot easier to transport. It doesn't need pipelines, so it can be loaded onto vessels and shipped around the world, essentially.
So we're hearing more and more about LNG when it comes to the energy market. Is it a fair assumption to say that we are becoming increasingly reliant on LNG as a source for gas?
Yeah, I would say so. There's a piece of legislation in the EU at the moment called Repower EU, and part of that is a roadmap to phase the block off Russian gas supply. So by the end of 2027, we'll no longer be importing any Russian gas into Europe. And what that means is we've got a gap there to fill in terms of sources of gas. And one place that is coming from is importing more LNG.
Useful context. You've mentioned that it's the second driver this month. I guess, in layman's terms, why is that?
Yeah, so LNG is traded on a global market, and what that means is we are then vulnerable to weather conditions elsewhere. So in Asia, for example, this month it's been really cold. So in South Korea and China, it's been sort of upwards of 10 degrees below their sort of average temperatures for this time of year. And what we tend to see when they have cold temperatures similar to here is that they rely on LNG as a source for meeting that elevated demand. So we've had increased competition from the Asian market this month. And also, it's been cold in the US. So the EU actually import 57% of their LNG from the US at the moment. And when they get really cold conditions in places like Texas, where there are multiple LNG export facilities, it can cause disruptions to supply. So pipelines can freeze, for example, or in sort of stormy conditions, there can be damage to infrastructure, which can force shutdowns at some of those facilities, which obviously then impacts the amount of LNG that we have available to us on the market. So just cold temperatures everywhere, essentially driving up the price of LNG.
So you mentioned US politics, and it's been rife in the news around certain tariff implementations. Based on that, do you see it having an impact, or already has it had an impact?
Yeah, I would say geopolitics has certainly been a driver for prices this month and had a small impact. In fact, geopolitics is actually a top three driver for us for the last 12 months. This month, I think the potential tariffs from the US that were to be implemented on European allies on the 1st of February, maybe not a key driver in terms of pushing prices right up to the peaks that we've seen, but certainly helped in keeping prices elevated.
Interesting. So based on that information, I think the key takeaway is, in regards to geopolitics, wherever that's happening and whatever the news is, it's imperative we pay attention as it could have a significant impact on our market.
Yeah, I totally agree. And I'm actually really interested in knowing what kind of conversations that you're having with your customers at the moment.
Yeah, well, the energy market at the minute is a very different landscape than it has been, say, this time 4 years ago. So customers, with energy being such a huge part of their spend, they want someone to guide them and to help them through what are turbulent times, both from a commodity and non-commodity aspect. Key for ourselves as a sales team is ensuring that our customers are aware of the rationale as to what's driving, both elements of pricing, but also giving them the information and guidance to help them make more informed decisions when it comes to their next energy contract. So to conclude, I guess the main question is those elements we've discussed today, so weather, LNG and geopolitics, do you see them continuing to be a main driver as we move into February?
Yeah, so I'd say it's really likely that the key drivers for February will be aligned with what we've seen in the last month. We'll definitely be keeping a really close eye on the weather. If we do see a sudden stratospheric warming event take place and the sort of cold snap off the back of that, it's likely we will withdraw even further from European gas storage. And the less gas that we have in storage at the beginning of summer, the more demand we have in summer to refill that gas in preparation for next winter, and we could see that push prices up further. It's also important, we've spoken a lot about commodity costs throughout this chat today. It's important to also take consideration of non-commodity costs, which make up a large proportion of the customer's bill. So we do have a webinar on this coming Wednesday, which is talking about the newly published TNUoS costs from Ofgem. So I would really, really recommend that your customers sign up to that if they're able to.
Emma, I just want to say thank you for your time today. The information you've shared is going to prove invaluable, not only for myself and my team, but also our customers that we supply. So thank you once again, and I look forward to spending time with your team next month.